Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after yesterday's whipsaw price action right across the board, it seems that the bears are coming back into the market when it comes to the Australian dollar. Although we've seen a rejection from the 72.40 resistance, was a key level, we are back underneath the 60-day moving average, just sitting on above this support here. Keep an eye on these technicals because I feel the market may eventually break down further as the dollar is likely to show some sign of recovery. But the market's still waiting for a result from the US in terms of the election. We got still to come the Bank of England tonight, and then tomorrow morning at 6 a.m. we've got the federal rate decision, the Federal Reserve rate decision, and then we've got the master event as well, being the non-farm payrolls. So let's see if the market does drop like I anticipate. And going from the technicals, I would like a little bit more confirmation from a couple of these patterns here. But overall, I feel that this pattern and this knee-jerk reaction should eventually break down. So as I mentioned, the market is waiting now for the FOMC rate decision and also the non-farm payrolls. As you can see from this spinning top pattern is indecisive in terms of the case of a bullish attempt to the upside. I feel that the market will probably fail as we see further attempts and to the upside and eventually turn back. One thing to note though was it did reject off the 116 level, and that was a key support, especially when you look on the weeklies here as we go back over the last few months. Nevertheless, from the rejection may give the bulls a little bit of confidence, but there is a bull trap probably around that, close to that high 117. The dollar yen, well, the market's got a very long-legged doji there, or more to the fact, a rejection from that 105.40-45 area. And from that, the technicals have broken down. It looks like the market is looking back towards this level of 104, and a break beneath there would give further scope down towards the low 103 region. It was assessed, first of all, from the bullish divergence, but from this candle here, completely takes out the market's positive signals and puts a bearish one back into play. And a break of 104, as I say, would look to the lower side of 103. The pound knee-jerk reaction to the upside looks back towards the support at 128.70-75. It's Super Thursday, being the fact that we've got the Bank of England rate decision, which is widely expected to keep rates on hold, but could see a slightly dovish statement and therefore would give the bears a little bit more of an upper hand and take out this level of 128.70 and look closer towards that 125.30-50 area. Technicals are breaking down, so this slightly enforces the view in terms of the bear case. With the rejection close to that 138, looks like sterling yen is back on the bear case and looking back at 134.40. It is assessed that the MACD is negative and therefore the recent breach back to the downside on the RSI through that midway point at 50 has given us further indication. But I would like to see the sterling take out that 128.70, which would enforce a move through 134.40 and look towards that 131.80 that I've been calling for a little while now. I'm not still, in this case, when it comes to gold, bullish, even though we have seen at least a few attempts to the upside, but still failing towards that 1,920 area. At present, though, there isn't really much to go on, other than the fact is that this price action last night has given us a little bit of a bias to the upside, as the technicals for the MACD for the last 2 days have got a weak bull or positive signal there, and also the RSI, and keeping an eye on how this market can actually play into tonight. I would say that we may see, like previously, a rejection from the top side, anywhere from around 20 to about 34. And from there could see a move back towards at least where that base is at 1,850. And it would seem the bulls are backing away from that $39.60-80 area. And from that could give a further risk to the downside and look towards that 36.70-80 and reassess. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.